continuing to experiment with AI for investment and tax strategy as a small business, being self-employed as a freelance cinematographer. And I was quite impressed with my first attempt in the first blog post I posed the question of what is the income range of a corporate cinematographer in Texas, and the results that came back were in line with my earnings as well as my peer group, other people I talked to, and I've done some one-on-one conversations with other viewers in the field that are at similar stages in their career to me. I'm 27 years in, age 47. I know there are errors in this conversation tree with Grok, but also it's got me thinking, it's given me more perspective on how to move forward. So take all of this as just maybe a suggestion for something you can experiment with, and post some questions that are relevant to your country or state and tax code there. I also got sidetracked on Friday playing around with, okay, what if I had my same trade and a business, but I'm based in London or Buenos Aires or Sydney, and in each of those cases it would spit back. What I learned is there are similar corporate structures for a self-employed individual, small business owner, in the sense that you can do something similar to an S Corp here in the US. In the UK, it was a limited profit sharing company. I forget what they called it, but basically in the UK, you also take a payroll as the owner, and then you can distribute a dividend, which is the same idea as what they call a profit share with a S Corp here in the States. And there were similar structures for Mexico, Argentina, and Australia. So I didn't get too deep into that. But anyway, my point being, I know everything I'm talking about is really specific to me here in Texas, but you can apply these same questions to anywhere you're working in the nation. Since we're all, people watch my channel, we're all doing something very similar. So using the numbers that Grok kicked back to me for corporate cinematography in Texas, it said on the high end side as a full-time freelancer with quality repeat corporate clients, you could make up to 150,000 plus per year in gross income. So that's where I'm using this number. It's not my number. It's what Grok suggested, but my experience, like I've said, is in line, and my income is similar. So I'm going to assume that half of that, and I did this in the previous vlog, is issued. Half the 150,000 is issued as payroll, and then after all the corporate taxes, payroll taxes, whatever's left over in the company account is distributed as a profit share. My net after-tax income in this scenario is just under, we'll call it 132,000. So next I'm thinking, all right, let's start investing and saving for retirement. So I'm going to build this whole model assuming at age 47, now I'm in the peak earning years of my career, and I've saved nothing for retirement, hypothetically. I should be able to save at least 20% for retirement at this point. So that's 20% of 150K pre-tax is 30,000. And next I had to come up with a number for monthly household living expenses. So thinking like 6,000 to 8,500. It's variable month to month. I don't have any, like, vehicles are paid off. I basically don't have any debt 27 years into my career. So I'm just going to round it for simplicity to 7,300 a month burn. That's 87,600 for the year. So I'm saying after the, we're starting with I already forgot the number. Was it 132,000, 30,000 is going into the IRA, and 87.6 is for living expenses, and then whatever's left between those two, put that into a brokerage account, grinding it out all the way to the end, the full Social Security year, age 67. And then just for simplicity, let's assume a fixed rate of return on those investments of 7% per year for the 401k and the brokerage. I think this is honestly, from being over 20 years playing in the stock market, doing mostly index funds, I think 7% compounded long-term is overly optimistic. At the beginning of my investment career, had basically a lost decade from like 2001 to 2011, maybe 2002 to 2012. I'm a pessimist on it. I think it's too optimistic. So we'll just jump ahead to the result here. So now it's saying, when I make those investments, the 401k, and it leaves 30,000 in the 401k, and that leaves me after tax 25,800 to invest in a brokerage account in year one. So that's kind of hard to read. So I was like, okay, let's make a table showing every 5 years from age 47 to 67. Lots of assumptions here. I'm just saying I'm going to make the same money I made this year in every future year, but inflation adjusted. So the business is just maintaining. It's not growing. And also, I acknowledge it is not realistic that I could work at age, say, 66 at the intensity I'm running at now. But the good news is, playing with this, it looks like I don't need to grind out all the way to 67, but there is an error in here. And reading the notes, I discovered real versus nominal for the two balances. I think it's using inflation adjusted numbers to represent today's dollars in the future. But then I've already adjusted my annual living expenses for actual dollars, nominal dollars in the future. So the table is already kind of corrupted. And I went through a few iterations of this where I'm like, this math isn't checking with my simple calculator math at 7% per year. What the heck is going on? And then I realized, the table is split. Half the left half is real dollars and the other half is nominal, or the other way around. So I posed the question, display results in nominal dollars, and let's just check age 67. We're going to go, this looked a little more accurate. So 1.5 million in the 401k, 1.3 in the brokerage. Next, I want to look at my drawdown. So this was 20 years leading up to retirement. And now let's look at 20 years of retirement. So from age 67 all the way out to 87. And I want to see what the Social Security benefit payment would be for me based on working 35 years of paying Social Security taxes. And I'm just using that 75K salary from 2026 as the inflation adjusted metric backwards in time as well as forward to fill out the 35 years. 35 years is the maximum number of years that create benefits for Social Security, and it just takes your highest earning income years. So not realistic, but it actually also does generate a benefit amount that's like very in line with my earnings history to date, even though it wasn't this consistent. Social Security benefits starting at 67, 49,000 for year one. 5 years later, it's inflation adjusted, and it's going to be a benefit payment of 54,000. Again, assuming Social Security gets funded properly when I make it. Like right now, I think Social Security, they're going to reduce the benefit amount in, I think, 2035, unless Congress reforms. Next, I was like, let's just combine the business income column with the Social Security benefits column, because when the business income stops is when I'm going to start Social Security. So just a little easier to read now. Okay, next, I got to start a 401k and brokerage distribution at age 67. So I'm going to withdraw from my investment accounts every year. That's to supplement Social Security, and withdraw a similar percentage of account balance from each account. For example, if 5% from the 401k, then approximately 5% from the brokerage. Calculate withdrawals based on enough funds to cover income tax from the 401k, the Social Security benefit, and capital gains tax from the brokerage. Add 2 columns to the table for 401k withdrawal and brokerage withdrawal. These amounts are the pre-tax value, all in nominal dollars. So Social Security is 49,000, 401k withdrawal is, we'll call it 89, rounded up, and 76, we'll round down for the brokerage. That's 214. But I only need 130. So there's something wrong with the math. My balances and the rate at which this is growing despite me withdrawing doesn't seem correct. So now I was like, all right, I got to investigate and figure out what the heck's going on here and why it's not mathing correct. So I had several back and forths with the AI here to figure out what the problem was. I think it took me a little bit to figure out what was going on. I'm just going to scroll ahead to that section. Scrolling down quite a bit here after a bunch of back and forth, I had further corrupted the table by playing with scenarios where I'm retiring earlier. I was like, well, what does it look like if I retire at 62? What about 58? So the table got updated, and then I'm like, all right, I got to do a math check here because none of this stuff is working right. So this same question would be valid if we had that original age 67 retirement year. But I presented the question, I'm like, or statement, math check. From 57 to 58, 401k balance increases from 413 to 462. This is with a $72,000 withdrawal and a 7% rate of return. Posed as a question mark. This was based on me retiring like in my late 50s, but just assume it's the same question with different numbers, and the math doesn't work at age 67. So it runs all the calculations, and we'll get back to that previous table momentarily. But final answer, the balance increases from 413 to 462. 71,000 withdrawal, 7% rate of return was incorrect. And the correct balance is 364 in that scenario. It's $100,000 difference. And then that compounds obviously every year to get you a more erroneous, inaccurate error. And unfortunately, all of these errors in this simulation showed I had significantly more funds than reality versus if it's going to make a mistake, I wish it would, fail in the wrong direction and bankrupt me on paper so I can course correct. At any rate, once I figured that out, I said, okay, let's revert the discussion back to the table that you saw in the previous edit, which was just assuming retire at 67. Oh my gosh, I hope this all makes sense. Okay, let's check all this math again. New table, error corrected, hopefully, age 67. So we need 130 after tax. And we've got 49,000 pre-tax and Social Security, 58 pre-tax from the 401k, and 50 pre-tax from the brokerage. 157, we need 130. That's probably about right before tax, after tax. Next, looking at the 401k balance, I think the rate of return is more rapid than reality when you're withdrawing a significant portion every year with a 7% rate of return. I don't think those numbers are right. $7 million by age 87. So next thing I asked it to do is expand the table to show every year instead of every 5 years. And then let's do a little calculator run on the every year table. So I'm going to take the 401k balance, 1576 minus the withdrawal, which is 58,000. That leaves 1518 times 1.07 is not 1674, it's 1624. So I think part of what's happening here is it's compounding the balance for 12 months at 7%. And then taking the withdrawal, would really, I should be withdrawing, like assume it's on the first of the year of age 67. I take the distribution, and then the reduced balance compounds at 7%. So I presented that question as another math check in essence. Start a withdrawal year, calculate next year's rate of return based on the previous year balance less the withdrawal times 1.07. And then I gave an example with real numbers, and then I get back the resulting chart. Okay, new table. Let's just check the math again, just at first glance. It looks right. 1576 minus 58 times 1.07, 1624. Okay, we're there. Some rounding differences. If any of this looks wildly incorrect on this final result, please let me know in the comments section and I'll investigate further. But the first pass on this, it was reassuring for me to see that now that I'm making a respectable income, if I can continue to hustle for 20 years from age 47 to 67 and starting with zero, save for retirement, I put in those 20 years of consistently investing. I have an abundance of wealth by age 67 and calculated all the way out an additional 20 years with 20 years of retirement. I'm looking at age 87. I've still got a balance of $3 million in the 401k account and $2.6 million in the brokerage, nominal dollars. So next up, I presented the questions, and we can cover this in a future vlog post because this is getting super long. But I was like, all right, now I want to backtrack it a few different scenarios and see at what age can I retire earlier than 67 and be left with $1 million at age 87. And then another iteration I wanted to run was assuming I started investing a lesser percentage of my lower income in my early years, because at 47, I've got a 27-year work history. So what if in my 20s I was saving 5 to 10%, and then I ramped it up to maybe 15% in my early 30s and get to 20% by mid 30s, plus a company profit share at some point in my 30s, start seeing that like I can get down to age 58 and then age 52, and then maybe even as young as age 50 or better. So we can play with all of that in the future. Again, my intention with this is just to motivate some other freelancers in this business to investigate your own financial future, doing your own thing, creating your own business, and setting it up for the future, because our jobs are changing. What we're doing now is not going to be as relevant, if it even exists at all, in 20 years. Plan for your future. Please, let's talk about this in the comments below.